welcome to a new video that we are going to be doing on the Market Disruptors channel, where I am going to be taking some of the biggest news headlines that you probably haven't heard about. We are going to discuss them and really tell you what they really mean, right? I like to think of things from a macro level. I'm a surfer. I like to ride trends. So I look for the storm. I see where the waves are going to come, and then I ride those waves. And the news gives us that, right? One little change today can send massive ripples in the future. And so we're going to pull the most obscure news headlines that you might not have seen. And even if you have, we're going to explain them in a way that's going to give you actionable information on how to plan for the future. So this is a new series that we're going to be doing. I'm going to be with my guest host, Matt, and we're going to be discussing these and giving you that insight that you need. So Matt, this is our first one. I'm excited to do these with you. So what are we going to do here?
All right. So I scavenged the internet and I grabbed some of the most highlighted stories that I feel that need some answering from Mark Moss. So I'm interested to hear your thoughts because we haven't even talked about it either. So I'm curious to what you're going to say, just as the viewers are as well.
Yeah.
Now, moving forward, I went ahead and grabbed one from Yahoo Finance, a very known, media channel that a lot of people check for their news. And one that caught my eye is they are trying to give the reason as to why gas prices are going up. And the headline is, here's why gas prices keep going up and how high they're likely to rise. Earlier in the week, I remember I made a comment to you and you said, oh, gas prices are headed much higher. And you said, quite a scary number. And here we are, I'm here in Florida and prices have already raised by $1. So they gave 6 reasons here on Yahoo. And the first reason was, number one was crude oil prices are rising. And then they gave an elaborate description as to why. And I'm going to go ahead and plug the Yahoo Finance link down below. They could find and read thoroughly. The second reason was harsh winter has been tough on refineries. Third, the pandemic has wiped out our refineries. Fourth, vaccinations are expected to boost travel. Fifth, stimulus check will drive spending and prices. And last but not least, summer will bring higher prices to gas blends. Now, I think it's quite funny, in my opinion. I don't believe any of those really have a direct correlation as to why the prices are rising. I believe that since we've taken action and take away the XL key pipeline, where we were going to start making our own oil and make it cheap for us, the halt of that project and now causing US to grab oil from other countries is one of the direct reasons as to why prices will continue to rise, along with inflation and many other things. But I'd love to hear your thoughts on that one.
Well, I would say that probably all those reasons are valid. I mean, sure. But like their first one, which is because oil prices went up. So the question is why, right? Exactly. Why are oil prices going up? And I would say it's more about policy, right? We had done some amazing things over the last 4 or 5 years to become an energy exporter. The U.S. became a major power player, and now all of a sudden, all that's being shut down. So the new administration came in. The very first thing they did, I don't know if it was day one, but probably week one, was to shut down a lot of our energy. So shut down energy exploration, shut down the ability to get energy off public lands, shut down the pipeline, as you said. And so they just full out attacked energy. And it wasn't anything unexpected. As a matter of fact, that was part of the platform that the Biden administration ran on, which was he was going to get rid of energy as we know it, fossil fuels, coal specifically he talked about, but also oil and gas. And so not only did he tell us that in advance, he's doing it. And that's why, obviously, when you start attacking energy, shutting it down, it's going to become more expensive. And I believe this is also part of a bigger plan. We know that when Biden was vice president, gas was about $5 a gallon. And so I believe that's part of what his administration stands on. I would expect to see gas back to $5 a gallon pretty quickly. And I wouldn't be surprised at all. As a matter of fact, I'll probably go out to say that I would imagine we'll see $10 a gallon gas maybe in the next 5 years. And if not in the next 5, definitely in the next 10, I would expect to see gas that high because it's a policy. It's a policy choice. And the problem is that, you know, every nation has always been great based off of the resources that they have, and specifically the energy resources. That's why you see countries like China going around and buying all the oil around the world. Just this last week, they went and did a deal with Iran in exchange for taking over all their neighbor bases and being able to put all their carriers in the ports. They're also putting all the Chinese jets on their airstrips. And in exchange, they're going to buy all the oil from Iran, not in dollars, in the Chinese currency. And so that's why countries like China are going to go gobble that up. But at the same time, the US is getting rid of all theirs. And so it's just a policy. And so we get rid of ours on natural production. We have to import more, as you said. Of course, there's other things, right? We had the Suez Canal get blocked. Sure, weather, seasonality, COVID. I mean, all those things can contribute. But at the end of the day, I would just say it's policy. The problem with that, you know, Matt, is that like I said, right? Like any country is great based off of the energy that they have. And so we can really trace this back. If you look at it, I've looked at it before, but I mean, you can just trace booms and busts in the economy with the ebbs and flows of energy. And really a lot of people think that the 2008 recovery from the great financial crash came because the government bailed them out with $700 billion. But I think that if you look deeper, you know, you can look at a country's wealth and directly tie it back to their energy output. And so there's some good examples of this. Obviously, I don't have my charts prepared, but if you look at Venezuela, which was was the richest country in South America and Latin America, and one of the richest countries in the world, one of the most resource-rich countries in the world, they obviously kind of went down the socialism path, and that tells a big part of the story, and it's really the catalyst for the story. But what happened is they thought that what socialism does is they say, hey, you know, the government is going to take over the means of production. And so rather than having a private oil industry, I'm going to get my crony buddies over here and I'm going to put them in place, get rid of the oil execs and put my buddies in over here so they can all get rich. But guess what? The buddies don't know how to run oil. So guess what happens? The oil industry starts tanking. And guess what happens? The economy starts taking. And so you can really look at the oil output of Venezuela and you can see the decline happening at the same time. Today, they're still sitting on some of the biggest oil reserves in the whole world, and they can't even really get it out of the ground. They can't even get it out of the ground. Think about that. And that's because of bad choices, bad policies over and over. Now, back to the US, what I was saying a minute ago is that a lot of people think that the 2008 great financial crash, the recovery was because the United States bailed out with $700 billion. But if you look at it a different way, if you look at some charts, you can see that it was actually at least correlated, if not causated, by the shale oil boom. So we started finding oil everywhere, natural gas and oil, because of the shale technology that was created, the fracking technology, I should say. So they were using fracking to get the oil out of the shale. And we went into this massive, for the last 12, 13 years, this massive energy boom, which has pushed the US economy higher and higher and higher. And so it's so important for a country to have energy. Obviously, without cheap energy, how can any country survive? You can't. And that's where you see a lot of these poor countries, right? They don't have any energy, or the energy they do have, they have to pay so much for it. And so people can't get ahead. You know what I'm talking about?
Yeah, exactly. Yeah. That's
and what's interesting and scary at the same time is that under the new administration, and really even bigger than that, the global goal for the United States is to get rid of all their energy. So
that's what I highlight here.
Per the Biden administration and the Green New Deal, or he calls it the Biden deal, per the Paris Accord, so I did a video on the Paris Accord, and each country basically pledges what they're going to do. So the United States has pledged to continue to drastically cut the emissions by getting rid of fossil fuels, while China and India have pledged to continue to produce more. But that's a different topic. But what's interesting is that the United States has pledged, we've agreed, we've decided, donated to give up our energy, which of course, back to this headline about energy getting more expensive. So we're deciding to give up our cheap energy and switch everything over to renewables, right? That's the plan. Zero carbon, net zero carbon emission. So that means wind and solar, right? So we're going to switch our energy from cheap, abundant natural gas, coal, and oil to expensive wind and solar, right? But Matt, where does the wind and solar come from?
From our natural resources.
But where specifically? Does the United States make solar panels and windmills?
No, we're gonna be importing everything once again.
So now we're importing from China solar panels. We're importing our energy. The solar panels will be our energy, right? The windmills will be our energy. So we're importing that. So we're getting rid of our abundant, cheap energy and going to now start exporting, which already makes it more expensive, and exporting even more expensive energy. And of course, again, when you look back through history, the countries that have the abundant energy are the ones that do really well. And so unfortunately, it's not a good policy. It doesn't look super good.
Yeah, and just to highlight there, imagine how implemented this abundant energy system that we have now, the resources that we would have to put out to take everything away and implement new means of travel and new means of everything. It's going to be, I can't imagine the printing press ever stopping, you know. I don't know where we're going to afford it.
Yeah, I think what people miss too is that like gas prices go up. Okay, so it's up 20%, 20 cents a gallon, whatever it may be. But that means everything in the world gets more expensive.
Yep.
Because everything has to be transported. Almost everything uses petroleum, right? So all the plastic in a car uses petroleum to be produced, but all the goods have to be shipped around, right? So the restaurant that you go eat at uses trucks that bring the food in, and their gas prices go up, which means they have to push their price up, which means when you go out to eat, you pay more money going out to eat. It means the clothes that you wear are more expensive. It means the shipments you get from Amazon are more expensive. And so every area of life gets more expensive because of that. And again, that's why it's so important to have cheap, abundant energy. When it gets more expensive, it's more expensive for all of society. And of course, who suffers the most? Who suffers the most? Huh?
The people.
Well, who? What people?
The taxpayers,
The poor people. The poor people.
Yeah.
The poor people, right?
Gonna feel it. We're all going to have to pay extra.
I mean, we're all going to have to pay, but when you're a billionaire, you don't worry about a little bit of a little bit of an increase. But the poor people, I mean, that's a huge cut into the percentage of their income. And again, it's not because the rich people are so, they're stealing everything by creating businesses and jobs. It's government policy.
Yeah.
The government policy is forcing energy prices up, which continues to hurt the lower class. And so they talk about this income inequality, and they're constantly trying to fix it. We're going to fix income inequality. But all their policies continue to make it worse and worse and worse. Right? Yeah. I mean, it's insane. It's insane.
All right. So this one's going to tie in with the one we just talked about. This one's good. All right. All right, Mark. So in the last article, you said it's going to be more expensive. And I said, I don't know how they're going to afford it. They're never going to have to turn the printing press off if they want to be able to put in this new green energy and take everything away and start a whole new means of travel, a whole new means of living, right? But I know how they're going to do it. And the way they're going to do it is they're going to continue to print all these stimulus checks and give everyone these free handouts. This leads me to the next article by the Washington Post. And it was a headline: Congress 1.9 trillion COVID bill, checks unemployment insurance and more. And then they dove deep into where they're allocating this 1.9 trillion. And it just leads me to believe that they're never going to stop the printing. There's going to be, I'm pretty sure one of your viewers might know who said this, there's going to be more stimulus checks than Rocky movies. And I think we're already beating it. So that's I think that they're just going to print everything into oblivion and try to afford everything. But really, it's just going to debase the currency, set us far behind. And we're going to have, like you said in previous videos, a major reset. That's the only feasible way. But to my point, on the Washington Post, these stimulus checks, there's another article on Cointelegraph where they're saying the pump of Bitcoin is correlated to these stimulus checks. So I was curious, do you believe that, and I watched many surveys. I'm going to plug them up on the screen here of this this wealth managing group, and they interviewed 235 people, and they said, what are you going to do with your stimulus check? And more than 60% said they're going to invest in cryptos over stocks. So I'm curious, do you believe that, one, are they going to continue with the stimulus checks and make us comfortable with government handouts? And two, is this a direct correlation with the rising valuations of crypto markets and equities?
Quite a bit to unpack there. What I would say first off is that, yeah, $1.9 trillion COVID stimulus relief bill, whatever, had almost zero to do with COVID. It's really about advancing their agenda. So yeah, a little bit of money went out to the people. They sent whatever, $1,400 or whatever it was. You get a bunch of tax credits depending on how big your family is, things like that. Could be for a family of four, you might get up to like $20,000 actually. But the point is that the $1,400, like a year later, so you made me lose my job for a year, and then you're gonna give me $1,400. Like, what's that really gonna do for me? At this point, most people have already like tried to like kind of figure it out. Like, the $1,400 isn't really needed anymore. It was needed like a year ago. And on top of that, the amount of money that actually went out in that stimulus was minimal. I forget the exact number off the top of my head, but it was, I think it was a few $100 billion out of the almost $2 trillion that went out. So it almost had nothing to do with COVID. It had everything to do with advancing the policies that we want. And we know they're going to continue printing, to your point, because they're already talking about another $3 to $4 trillion. And so more money printing is on the way. And it's always been going that direction. They want to continue to spend more money, and they want to get more and more people dependent on what they're doing. And so I think we're going to see that. I mean, obviously, on this last presidential election cycle, we had Andrew Yang running on a platform to push UBI, Universal Basic Income, which means everybody gets a paycheck. But I would argue that we already have that, because we've always had welfare, we have EBT, we have Section 8 housing. So we kind of already have all that stuff. This is just kind of making it a little bit more formal. Now, to the second part about, is it directly correlated with the rise of the stocks or the rise of cryptos? Yeah, I would say it is. Obviously, as we already talked about, all this money, people are trying to stick it anywhere they can. I think had that conversation earlier about this melt up. So everyone's getting this money and they're trying to stick it wherever they can, whether that be stocks or gold or Bitcoin or buying real estate or remodeling their house or whatever it may be. And so, yes, it is, but it's not 100% the cause of that. It's definitely correlated to that. The other thing I would say is that, you read that survey, who knows who they surveyed, 240 people but they said they were going to put it into crypto. That's fine. In the first, a year ago, a lot of them went down to Robinhood and started trading options on Robinhood. You could see the rise of new app downloads on Robinhood was going up like crazy. And now, more people are interested in crypto. That's fine. But we're talking, a few people or whatever, a few thousand people, a few million people putting their $1,400 stimulus in there. Does it have an effect? Definitely it does. Does it have as much effect as, Elon Musk putting 1.5 billion in or things like that? I mean, we have, MicroStrategy with another billion and a half in. So I would say that while the stimulus checks and the retail people getting in does have an effect for sure, I would say it's not the primary driver of that. So yeah, that's my guess.
I honestly believe that we're not thinking of the bigger picture here. We're so just one-sided because we're just one particular moment in time, but we have younger generations. Now they're growing up with a norm of a government check. They're growing up with a norm of government assistance. And my fear is we had a golden era where we could actually kind of shift and sway the new coming generations to understanding the rights and the wrongs, the do's and don'ts. But unfortunately, they're coming and they're growing up in a lot of don'ts. And those don'ts are becoming normal for them. So
Definitely.
It's gonna end up where socialism is here more now than ever, and it's going to be more of a predominant favorable thing amongst younger people, and anything outside of that is going to be considered wrong or considered unfair. That's my biggest fear of these
Well,
stimulus checks and government intervention.
it's a valid fear, and we're definitely going in that direction. The problem is, if you think about a lion in the wild, obviously I have the
Yeah,
lion on the screen behind me. And you think about a lion in the wild, the king of the jungle, right?
yeah,
The
yeah,
biggest beast. I mean, it's savage. I mean, the lion is just amazing, right? The king. That being said, the life of a lion is not that good. I mean, they have to fight all the time to protect their place.
yeah,
They're always wondering if they're going to have another meal. There's poachers trying to kill them, right? They have to be under the harsh elements. So the life of a lion isn't really all that good, but they're free. Now, we can take that king of the jungle and we can stick him in a cage in a zoo, and we can keep him safe in that cage, and we can give him his antibiotics, we can give him his one steak a day, and we can keep him safe. But now he's living in a cage, he's not free. And so I think those are the two kind of differences, right? We can either be in this free world, and unfortunately it's not always comfortable, but at least we're free, or we can live in a cage where we'll always be safe, but we're living in a cage. And so those are the kind of two options we have. The problem, I think what you're kind of hinting to, Matt, is that once an animal grows up in a cage, you can't go release them back in the wild.
yeah,
That's the problem. So you have lions that were born in captivity, and you can't just go release them to the wild. They'll never survive. And so kind of as what you're saying, right, we have this whole generation of people that are being brought up on this. And we already have, like I said, we've already had welfare and Section 8 housing. So we already have generations of people that have been brought up on the state. And those people, the chance of them ever returning back to the wild is probably impossible, right? And that's a big problem. Now, that being said, I don't like to be all doom and gloom. What we do know is that this system will always fail. History tells us this because it doesn't work. And so eventually it fails, and on the other side of it, there's going to be good things. But yeah, we're definitely in this transitory period.
yeah. To that note, I'll never forget something that you highlighted to me when we were in Arizona. You said to me, there's 4 phases, and you help me out here because I may chop it up a little bit, but feel free to chime in at any moment. You said tough men make good times make weak men make bad times, and it's just a repeating cycle. And I feel like
it's the fourth turning. So there's a book called The Fourth Turning, and it basically breaks that down. It's a 90-year cycle, and so it's exactly what you said, a little bit different, but bad times, hard times bring good men.
yes,
Good men bring good times. Good times bring weak men, and weak men bring bad times. And then bad times bring good men. So it's a cycle, and it's a 90-year cycle. They're called The Fourth Turning. Like I said, there's a book about it. And we are in the fourth turning right now, the fourth period. And what's interesting about this, when you go back through history, and you can see this through thousands of years, in that fourth turning that we're in right now, it's where massive change happens really, really quickly. So, for example, 90 years ago now is when we got an entire new financial system, right? We got the Federal Reserve, we got the IRS, we got the US dollar. The entire world changed right at that time. And so it was Vladimir Lenin who said there's decades where nothing seems to happen, and there's days where decades seem to happen. And so in that fourth turning, we can see decades happen in days. And so, yeah, we're definitely there. And to your point, that cycle is real. And it's a good read for anybody who wants to dig in more on that.
yeah, that it sticks with me to this day. It weighed very heavy and made tons of sense. And I love what you said about how if you raise a lion in a cage, you posted something on your Instagram and it said, what if I told you, don't be like this bird in a cage? And it shows a bird in a cage. Just because it's getting fed, the bird thinks he is free and everything is normal. And then it says, don't die while you're still alive.
Yeah.
And it just goes to your point, raising a lion or raising a wild animal in captivity is just going to kill them while they're alive. So,
yeah, exactly. So and I think it's also, like I said before, like it's always going to fail because it goes against natural laws. So there's natural laws of the universe that cannot be broken. For example, gravity. If I fall off of a high rock or building, gravity is going to get me and I'm going to die. It doesn't matter how much money I have. Now, we found ways to beat gravity, suspend gravity, bend gravity. But if you mess up, it's always going to snap back and get you. And so there's natural laws. And one of the natural laws of the universe is that you must sow before you reap, right? You have to produce before you can consume. Simple. But what's happened is that we're in this fourth turning. And so the hard times brought great men, the great men brought great times. So those great men brought great times and they stockpiled wealth. They had overabundance. They worked hard, they saved, they created, they produced, and they produced so much that then those good times brought weak men. Those weak men just started living off of things they consumed without producing. And now we have this entire generation of politicians and that have never created or produced in their entire life. And they don't even understand the natural laws of the universe. Now, everything in nature knows this, right? Mm-hmm. The gazelle wakes up in the morning knowing if it doesn't run faster than the fastest lion, it's dead. And the lion wakes up knowing if it doesn't run faster than the slowest gazelle, it's dead. The ant saves up for the winter. Like, everybody knows this. It's a natural law of the universe, but yet we've lived in this world where now people are consuming without ever producing, and now they're making the laws, and they don't understand the laws of the jungle, we could say. And so unfortunately, just like gravity, it's always going to come back. It's going to have to come back to reality.
That was probably the most textbook Austrian economic answer I could have ever heard in my entire life. It was, because Keynesian economics, everything's so revolved around consuming, no producing. The only thing they're producing is the printer. So what you just said right there is probably going to be my next answer to anybody when they ask Austrian economics.
Well, what the Keynesian economics and not just them, but everybody, I think all the academics do is they try to make things so complex and so hard to understand. And then they sound really smart. And then you're like, well, shoot, I don't understand that. They seem to understand it, so I'll defer to them. But what I like to do is I like to break everything down to the most basic first principles, we call it. So I believe that when you break things down to the most basic, you can understand them. And when you can understand them at the most basic, then you can understand them at the most complex, not the other way around. So rather than try to like dig into this whole economic thing and let these people seem all smart, we just break it down and go, well, shoot, makes sense. How can I consume something I haven't produced? I get it, right? Like, obviously, right? Like, price moves on supply and demand. Like, if nobody wants it, then so it's like things are very basic. You don't need to make them so complex. So anyway.
Yeah, I agree. So that now moving forward, I know how to answer anybody that asks me Austrian economics or Keynesian economics. We'll go watch Mark's video. He explained it textbook. Now I have another news article. And before I get into it, I want to know your thoughts, because that last piece of news article is the last one I have for the day. But I want to know your personal thoughts on the NFT market, the NFTs, non-fungible tokens. And for anyone who's up to speed, if just standard fungibility, you need to understand the whole word. So obviously non-existent. Fungibility is a characteristic of goods, commodities that is interchangeable and indistinguishable from one another, like fiat currency. So then you have the emergence of non-fungible tokens. And I believe that we are in a point in time where we are seeing digital being, it's like paint meeting the paper and someone selling it. Now we have digital art meeting the network and selling it. I believe this is like a new boom or a new renaissance of something to come much greater than what people are seeing, than fuzzy cats and weird, awkward drawings of animes and selling for millions of dollars, people selling tweets. But there's gold out on the internet, and it's like digital real estate. You could get it, put it on a network and sell it later for X amount of dollars, because the price is objective, of course. But I'm curious, what are your thoughts on this boom of NFTs and these crazy sell prices?
Well, yeah, I would say first off, I think they're a sign of the times. And so we're seeing all types of prices going completely haywire and going exorbitant and going for way over. And that's a sign of the $8 or $9 trillion the Fed has just pumped into the market. And that's just in the US market. Foreign central banks have probably pumped in another 8 trillion. So we have, $15 trillion that have been pumped into the world in the last year. And to put that into perspective, the GDP of the US is like 20 some million dollars. So like we've created almost an entire year's worth of production and just dumped it in the market. So we're seeing that across all kinds of places. I have a buddy who's a car collector. And so NFTs really right now we're seeing them being used for collectibles. And so, so we'll break that down. So basically, as you said, right, like a dollar, no matter how dirty or torn up it is always being able to be exchanged for another dollar.
Yeah.
One could be brand new, pristine. One could be torn up and ratted out, but they're always one-to-one. They're fungible. And so you're talking about non-fungible tokens. So a Bitcoin is fungible. One Bitcoin is always worth one Bitcoin. But these are not. And right now what we're seeing is as you said, art being put into them and collectibles and things like that. Now, there's always been collectibles. And so Gary Vaynerchuk is a big proponent of NFTs right now. But you have to understand Gary V. So he grew up as a stamp collector, I believe, and then baseball cards. And even today, he still goes to garage sales. He makes videos on his channel going to garage sales and buying like old collectible stuff and reselling it. So he's a collector. He gets that stamp collecting, coin collecting, baseball card collecting. My little brother sells Pokemon cards, right? People collect Pokemon cards. So there's always collectibles. I buy gold. I have some gold coins, but I don't really get into the collectible coins. And the reason why I don't do stamps or baseball cards or gold coins is because I don't really understand them, right? That's like, I could go to a stamp collecting show and I wouldn't know anything about any of the stamps there, but people there do. And no different than art, right? People collect art. I have a buddy that lives here by me and he collects cars. And he bought a couple really old Mustang Cobras, and he bought one for $25,000, one for $50,000, both about 15 years ago. They're worth $1 million and $2 million today.
Wow.
And so it was a collectible car. He knew about this issue and Shelby, and he got it signed and this and that. And he's done really well with it. But I think it's a sign of the times, that, again, that people are trying to put their money anywhere they can, and where people typically want to put their money into scarce assets. So beachfront property is a scarce asset. Bitcoin is a scarce asset. Gold is kind of a limited asset, but art could be a very scarce asset as well. And so it's a sign of the times. But in my opinion, I mean, right now it's being used for collectibles. And so, there's obviously a market for collectibles. People have been collecting baseball cards and all that forever, Pokemon cards. For me, it's not a life altering. It's not a revolution. It's not a technological revolution that's going to change the world, in my opinion. But people are having fun doing collectibles. For me personally, I've never been into collectibles. I think from what I've been able to see, I think that what we always see with new technology is people get too far and too fast and they expect too much. So in the early days of the internet, it was webvan.com delivering groceries, and it was pets.com selling pets stuff online. And it was too early and it was wrong. And I think eventually it came around. And I think right now they're trying to do everything they can with these NFTs. But I think it's probably not the best use case for them. And I think it's probably going to evolve. So for example, an NFT really is a cryptographic token that shows you own an asset, right? So I don't actually have the asset.
Yeah.
We can both have a digital JPEG of an image, like this image on my screen right here behind me. I can have it on my screen. You could have it on your screen. The difference is I have a token that says I actually own the JPEG. But in the courts, I think possession is like 9/10 of the law. So if we both have the JPEG on our computers, what difference does it make if I say I own it? Right?
Wow.
Think about that. The other thing is that a lot of times that digital art is going to be on someone's server. What if that server goes down? What if they delete that file? Then what do I have? Right? So I think I don't think this is the highest and best use case. Where I think that it's probably going to really take a hold is in digital gaming and like VR, right? I think virtual reality is probably going to continue to grow. If you've watched that movie Ready Player One, it's probably a future that we'll probably have. And so I believe that, inside these games, I'm not a gamer, but inside these games, you can buy a new skin for your gun. You can buy new weapons and things like that. The problem is that stays inside that game. But I should be able to take that asset and move it into another game. I bought this gun here. I can take that asset and use it in another game. Or I could resell that gun to another player. I could resell that skin to another player. And I can see NFTs making sense in that type of a virtual world. I think people trying to apply it to like the real world doesn't really make sense. But people are making a lot of money with it. But as I said, I guess I think it's just more a sign of the times.
Yeah, definitely. That is a good point. I never thought of it about it in a gaming aspect, but that's so true. My little brother is a professional Halo player, and I'm pretty sure he has every single upgrade you could ever imagine.
Right.
And what's to make him unique than the other guy that he can't just unlock and get what he has? So that is a good use case there for it. I do, that makes tons of sense there. Yeah. I still believe though that the NFT market can provide some type of value. I mean, like you said, I literally have a stack of Pokemon cards right in front of me, like a binder this big. There's probably maybe $150,000 in there worth of cards that I've had for 25 years now. You know, they're like the first release, first edition. Never would I have known that growing up that these were going to be worth thousands of dollars.
But what I would say though is like, there's a bunch of like gold backed tokens, right? Yeah. So Paxos or whatever, right? Where it's like, I own a token, but it represents gold, but now I can trade the token, but I'm trading gold, right? I think that's ridiculous. Like, just own the gold. Like, why do I want to have a token that someone else has? Because now there's counterparty risk. How do I know if they have my gold? How do I know they didn't steal my gold, right? Like, why not just hold the gold? And so I would say the same thing about the cards, the Pokemon cards, the art. Why not just own the art? Why not just own the Pokemon card? Why do I need an NFT that says I own it? So I think just like the gold-backed token is a wrong application, I think the token-based art is a wrong application. But in a virtual world, I think it makes sense. And I think that's where it's really going to grow. And I think, there's probably, I believe, getting back to that movie Ready Player One, it's about virtual reality. I believe that's probably a world that we're going to. And so in that world, we're going to have all types of virtual things. And so I could see it having an application there. So that's kind of what I'd look for. Again, I think it's just technology people getting too far ahead with technology.
Nonetheless, we still have major implementations of these blockchains and what they're capable of. All these smart contracts, these files where you could have your own ownership of digital assets and whatever it may be. So, I mean, regardless, I think it's showing some new form of use case that someone decided to pop up and say, hey, we could do this too. So I think it's a cool feature, and I'm excited to where it may lead, to say the least. But that brings me.
I love technology, and I love to where it can lead, and so it's definitely interesting to watch that. I think, again, I mean, because I'm old and I invested through the dot-com boom, I have that kind of perspective, and I've gone back and studied all the technological revolutions of the last 250 years. But they all kind of work the same. And especially living through the dot-com boom, I kind of saw that. And again, like the technology gets too far out in front. And so what we saw in the internet days was, for example, all these publicly traded companies said, oh, we could never be on the public internet because our data is not safe and this and that. So we're going to spend $1 billion to create an intranet. And then all these publicly traded companies created all these intranets. But today they're all gone. There's billions of dollars wasted. Now everyone's just on the internet. And so what I'm really excited about, and really just in the last 2 weeks, I've really started to see this start to shift, is that almost every type of blockchain application that you could see happening is all now happening on the Bitcoin blockchain on layer 2. And so I think eventually all this technology comes back to the Bitcoin blockchain, just like the internet, all the intranets all came back to the internet. There's one intranet, right? And that's it. And so I think that's what's going to happen. The technology, the way that we use like an NFT is cool. I think at some point it'll just be on the Bitcoin blockchain.
Yeah. Well, speaking of Bitcoin, PayPal just launched its crypto checkout service. So you can now check out of PayPal, convert your cryptocurrencies into cash or whatever form of fiat and check out. And previously, I would say, I don't know if you remember, there was an article that was floating that for every Bitcoin sold, PayPal was buying like $1 million worth of Bitcoin. I'll find the article, I'll pop it up on the screen, and they were buying just a ridiculous amount of Bitcoin for every Bitcoin sold. So now I understand why. Now I understand the agenda behind why they were absorbing so much of the market. It's because now they're allowing people to check out with it. And it just goes to show that the adoption is still having a gigantic network effect. And you're having these large companies participating in the crypto environment. We have, I saw another article, wealth managers are owning up to 85% of cryptocurrencies. 85% of wealth management companies are involved in cryptocurrencies. And it's, I remember back in 2017, everyone was screaming institutional money. It was like the key word for crypto. Just type in institutional and just Bitcoin everywhere. And now we're really having that. You know, Tesla, you could buy your car with Bitcoin. And I think that this is going to be a domino effect. And it's just going to start this whole new era of all these companies wanting to own cryptos. Also, they're expanding their balance sheets and raising their market cap just by owning these assets. So what is your take on the adoption, especially of the authority, or should I say, the full force of PayPal just diving in and letting people check out with cryptos that aren't even familiar with cryptos? It's getting in front of a huge audience, you know?
Yeah, I mean, there's a bunch of thoughts there. One, obviously, taking it to a huge audience is good, right? It pushes that adoption, that use case. I do think it's interesting that a company like PayPal is adopting a technology that's meant to put them out of business. It's like they're playing with fire and they're eventually going to get burned, because at some point the merchant and the consumer are going to realize, why are we going through PayPal when I can just send it to you directly? So I think eventually they'll figure that out. But they're definitely helping the adoption. That's good. What I would also say is that, you know, unfortunately right now, well, I don't know if it's unfortunate. Bitcoin and other cryptocurrencies are considered property by the IRS. And so that means every time you transact in them, it's a taxable event. And so, you know, every single time you go buy a cup of coffee with your crypto or whatever you're going to buy on PayPal, on Amazon, whatever, it's going to be a taxable event. And so that's probably a pain in the butt. It's a big deterrent. Now, I said unfortunately, or maybe not so unfortunately, you know, because it's considered property, then we can have capital gains tax, which is a much more favorable tax rate. If they took that away and turned it to like currency, like a Forex trader, for example, then you may have to pay ordinary income on it. However, with currency, you have like an exclusion. So small transactions under a certain small threshold are not taxable. So that way you can, like, that way I could convert my money into pesos. Like next week I'm going down to Cabo. So I convert my dollars to pesos. I go to Cabo, but what if those pesos go up in value before I spend them? Is that, now do I owe tax? Like, and so there's an exclusion for currencies. But if I'm a big Forex trader, then it's taxed or an income. So taxes are a tricky issue. What I would say overall, like I said, I love PayPal bringing adoption to the space, but spend your fiat. Don't spend your Bitcoin. Right? Fiat's losing value every day. So spend your fiat. Bitcoin is gaining purchasing power every day. So save your Bitcoin, spend your fiat. That's my opinion.
Yeah, I love what you told me when you were here in Miami. You're like, oh, bro, don't spend your Bitcoin, man. Stop selling it. Put it into like what was that company that allows you to lend against it and they give you interest? I'm drawing a blank.
You can put it into BlockFi. You could borrow against it. You could get interest against it. Yeah.
Exactly. Yeah. So I believe that's a useful tool and a good hint for your followers to be participating in. Once they don't have to waste their crypto. You know, I've sold a ton of crypto. I've been involved since 2016, a little later than you, but I've ended up, you know, liquidating quite a bit of it. But now I know what to do with it.
Yeah, you just look back and realize, like, shoot, how much did that cost me? I mean, there's the famous story of the guy who, you know, bought pizza for 10,000 Bitcoin, right? And like how much that cost him. And so, looking back on history, I wish I would have held on to what I had back then. And so, you know, we can't go back and rewrite history, but we can make sure we don't repeat the same mistakes. And so for me, it's just a matter of not repeating those same mistakes over and over.
Yeah, I agree. You always said history tells the future. I mean, how many times has this kind of happened? You had people that probably had tons of gold and got rid of it. Now it's almost $2,000 an ounce, roughly.
Yeah, and to that point, you know, when gold became the dominant money across the world, some countries tried to stick on the silver standard, like China did. And so they didn't want to switch to gold. They wanted to stay on the silver standard. The problem was silver was inferior to gold. And so while China tried to hold out with silver, they eventually lost most of their wealth and thereby lost their power as a global powerhouse because they held onto the wrong money. And so likewise today, back to history telling us the future, likewise today, you can choose to hold dollars. You can choose to hold whatever crypto asset you want. You can choose to hold silver. But at the end of the day, the best money wins. And so you got to place your bets accordingly.
Yeah, That's a great point. The best money does win. I like that.
Good money pushes out bad.